Hello everyone, I'm DiCaprio. Welcome back to the channel. We're standing at the very beginning of 2026, a new chapter, a new set of opportunities. You know, a close friend of mine once shared a quote that has stayed with me ever since. Don't chase the butterfly. Take care of your garden, and the butterflies will come on their own. The same principle applies to finance. Instead of exhausting ourselves chasing the hottest growth stocks and losing sleep every time the market pulls back, why not build our own garden of passive income, where cash flow finds its way into your pocket month after month? Today, I want us to step away from dry technical charts and talk about something deeper, the philosophy of freedom. I'm going to introduce you to what I call the four horsemen in my family's investment portfolio. True cash flow machines in the Canadian and U.S. markets that I believe can form a rock-solid foundation for anyone aiming for early retirement. Let me be very clear about this. Income investing does not mean giving up growth. Have you noticed that the biggest mistake most people make is believing they must choose only one, either eating well, high dividends, or sleeping well? Long-term growth. My years of experience in the U.S. market have taught me something crucial. Modern financial engineering, especially the combination of covered calls and leverage, has shattered that false trade-off. The year 2021 marked a historic turning point with the introduction of embedded leverage. Think of it like installing a turbocharger into a classic luxury car. The car remains elegant, smooth, and reliable, but the power is now on a completely different level. We'll take a deep dive into HDIV, HYLD, QQCL, and HHIS. These aren't just lifeless ticker symbols. In my family, they represent my children's education fund, my parents' retirement income, and my own peace of mind. I call them the four horsemen because each serves a distinct mission. From the stability of the Canadian economy to the explosive strength of the S&P 500, the innovation of the NASDAQ, and the dominance of mega-cap tech giants. But let me be clear, every rose has its thorns. As a professional, it's my responsibility to remind you that in the 2026 interest rate environment, the cost of leverage is a variable we cannot ignore. A smart investor doesn't just stare at an attractive 20 to 25% yield. They look through the entire structure, taxes, financing costs, and operational risks. That's the difference between playing the stock market and being a real investor. So let me ask you this. Why do you invest? Is it just for bigger numbers on a screen, or for more peaceful afternoons with your loved ones, free from financial stress? If your answer is the latter, then this video is for you. I won't just hand you a dry bullet point list. We'll peel back every layer of the strategy together. Why 25% leverage is a double-edged sword, how to use it skillfully, and how behavioral psychology can trap investors in the illusion of high income if they're not careful. So let's begin this journey together. No rush, no noise. We're here to build sustainable prosperity. You know, a friend of mine once said something that really stuck with me. Sometimes the most boring thing is the thing that makes you the richest. HDIV is exactly that kind of investment. It's not loud like cryptocurrencies. It's not flashy like the latest AI stocks. Instead, it focuses on the very backbone of Canada: banks, energy, and utilities. I want you to clearly understand this. Why did I choose HDIV as the foundation? Because roughly 70% of its exposure is to Canada, a market known for its resilience. But here's the beauty of HDIV. It doesn't just sit still. It uses 25% leverage to turn so-called old economy businesses into powerful income engines. If you look at total return, you'll see that HDIV has quietly outperformed many well-known index funds. It proves a simple truth. In investing, stability plus intelligent capital structure is often the real formula for breakthrough performance. But let me challenge you with a question. Have you ever noticed that sometimes we're so focused on being safe that we miss big opportunities right next to us? That's exactly why the second horseman enters the picture, HYLD. If HDIV is the shield for protection, then HYLD is the spear that allows us to advance into the largest market in the world, the United States. A Wall Street professional once told me, never bet against America. HYLD is our way of betting on America, but in a very different style. You're not just buying and hoping prices go up. You're buying world-class blue-chip companies and getting paid for their volatility through a covered call strategy. HYLD acts like a precision filter. It selects the best of the S&P 500, adds 25% leverage, and delivers a steady cash flow of around 12% annually. For us, earning 12% a year while still owning the strongest companies on earth is not a fantasy. It's reality. But this is where I want to share something from real experience. There's a dark corner that almost no one talks about when they see that 12% yield. It's the cost of waiting. Have you ever wondered why some investors hold great funds like HYLD, yet never seem to get rich? It's because they lack the patience to reinvest. In finance, we call it the power of compounding. I prefer to call it time doing the heavy lifting. When you receive dividends from HYLD or HDIV, you always have two choices: spend it on a luxury dinner or use it to recruit more soldiers into your army. I've seen many investors in the US fall into what I call the income trap. They see money arriving every month and start spending freely. Then when markets shake, they no longer have the firepower to defend their portfolio. Don't fall in love with the yield number. Fall in love with net total return after leverage costs and taxes. These two horsemen, HDIV and HYLD, are like silent guardians. One stands firm along the cold northern border. The other pioneers prosperity in the sun-soaked south. They don't require you to stare at a trading screen every hour. They exist so you can confidently shut down your computer, take a walk with your children, or finally start that hobby you've been putting off for years. But what if you're someone who wants a bit more adrenaline? What if you want your portfolio to carry the momentum of technology and real disruption? Then we need to talk about the remaining two horsemen, the ones infused with Silicon Valley DNA. If HDIV and HYLD are the solid ground beneath our feet, then the next two horsemen are the sky, where creativity has no limits. Let's talk about the third horseman, QQCL. Have you noticed that over the past decade, no matter how many shocks the world has gone through, technology giants always seem to find a way to rise again? QQCL is built on the NASDAQ 100, but it's far more than a simple buy and hold strategy. Think of it like owning a piece of prime real estate in the heart of Silicon Valley and leasing out half of it. You still own the valuable land, but every month the tenant sends you a check. Here's what I want you to clearly understand. QQCL writes covered calls on no more than 50% of the portfolio. Why 50%? Because the experts at Global X understand that technology is a wild horse. If you tie it down too tightly, by writing options on 100% of the portfolio, you risk missing overnight 10 to 20% surges from companies like NVIDIA or Apple. QQCL delivers the perfect balance: a strong monthly income stream, roughly 12 to 15% yield, while preserving the growth potential of the future. Now let me introduce the final horseman, the ace card in the income game, HHIS. If you ask me where the line is between reckless speculation and intelligent cash flow harvesting, I'll point you straight to HHIS. This is where true superstocks come together. Tesla, NVIDIA, Coinbase, names that alone can make hearts race because of their volatility. But as a friend once told me, volatility isn't the enemy. It's the raw material for cash. HHIS is built on that philosophy. With yields reaching up to 25%, this fund is a genuine cash flow monster. How is that possible? Because when stocks like Tesla or NVIDIA move aggressively, the option premiums we collect become extremely rich. HHIS is not for the faint of heart. It's for investors who understand they are holding the cutting edge of innovation, but instead of waiting 10 years to harvest the fruit, they choose to milk the cow every morning. That said, as your financial companion on this journey, I need to speak honestly about a critical truth. QQCL and HHIS both come with tax dark zones that you must navigate carefully. In the United States, the massive cash flow generated from option premiums, especially from concentrated funds like HHIS, is not treated like traditional dividends by the IRS. If these funds are not placed in the right type of account, such as a Roth IRA or 401k, A significant portion of that 25% yield can flow straight back to the government instead of into your pocket. This is a mistake many Americans make. They focus obsessively on making money, but forget about keeping money. Don't let yourself become rich on paper, but poor after taxes. So here's the real question I want to leave you with. How much volatility are you willing to accept in exchange for financial freedom? An ideal portfolio is never built on HHIs alone. It needs the calm stability of HDIV, the market power of HYLD, the balance of QUCL, and finally the cash acceleration of HHIS. When you bring these four horsemen together, you're no longer a lone individual in the market. You're effectively running a family investment fund using strategies that were once reserved exclusively for Wall Street billionaires. In the end, investing isn't about becoming the richest person in the graveyard. It's about being able to say yes to what truly matters and no to unnecessary pressure. The four horsemen are ready. The only question is, are you ready to take the reins? So we've now walked through the full lineup of the four horsemen together, from the resilience of the Canadian economy with HDIV to the explosive power of the U.S. market through HYLD, the intelligent balance of QUCL, and finally, the powerful cash flow generated by tech giants inside HHIM. But before we part ways in today's video, I want to share something with you that I believe is more important than any ticker symbol. You see, an old friend of mine on Wall Street once said, "The stock market is the only place where people panic and run away when things go on sale." But as income investors, we look at the world through a very different lens. When markets become volatile, that's not a time for fear. That's when our cash flow machines are often working at their best, collecting richer option premiums while others are frozen by uncertainty. I want you to truly understand this. The four horsemen are not a magic wand that will make you rich overnight. They are tools. And like all powerful tools, they demand respect and discipline. Using 25% leverage or writing covered calls is not gambling. It's a science of probabilities, patience, and emotional control. There's one truth I remind myself of every single day. Financial freedom is not having a lot of money. It's no longer having to think about money. When I build portfolios for my parents, my grandparents, or my own family, the goal is never to brag about 6 or 7-figure returns. The real goal is this. On a beautiful Monday morning, we can choose to sit on the porch, read a good book, or take our kids to the park without worrying whether the market is green or red that day. The income from the four horsemen will still arrive, quietly, steadily, like an underground spring that never dries up. So here's the final question I want to leave you with. Are you investing to become a slave to numbers or to make those numbers serve your life? Income investing is an investment in time, and time is the most valuable asset of all. The one thing we can never buy back. If you found today's message valuable, help me spread it by hitting the like button or sharing this video with a friend who's still searching for a way out of financial stress. And don't forget to subscribe because in upcoming videos, I'll be fully unveiling my family's real portfolios, from my father's retirement account to my mother's TFSA, so you can see how the four horsemen actually fight in the real world. Remember this, long roads reveal strong horses. Stay patient, stay disciplined, and above all, start enjoying your life today. Wishing you a prosperous and peaceful 2026.